Welcome, everybody, to another episode of Sound Money Matters Live. This is your host, Daniel Diaz, and we have our chairman, Rhyno Coetsee of Citizens for Sound Money, joining me today. And we also have Rob Kientz joining us today on Sound Money Matters Live. Rob, so before we get into why Rhyno's here and about the gist of the episode, how about we get into what the heck is going on in the silver markets? 10% up on Friday, 10% down on Monday. I know you are the expert on this, so go ahead and give us an update.
All right, so I think there's a silver war going on, and silver's gone from like 21 to set right now as we're recording this or doing the live at 76.24, about 76 and a quarter. So it's tripled in less than 2 years. And essentially what happened is that last 4 to 5 years of where we had shortages from what the mines were putting out to what people are using has finally caught up to the market. A lot of the above ground free, what they call free floating silver or tradable silver, and these big industrial exchanges in London and in the West have started to run down. If you look at Comex, I think they're still reporting 119 million ounces on the last report I looked at, free in the registered category for silver, which would be free to trade. Whether or not they still have that amount of ounces, I don't know. And whether that or not that number is completely correct. There's been a lot of speculation because a lot of the data coming out of the COMEX, whether it be from CFTC, because part of it comes from the regulator, part of it comes from the CME group, which is the exchange, the people that run it. They produce different reports, and not everything has come out timely. The government shutdown is no longer an excuse, and so some data just looks incomplete. And I've been following this for many years, and I've never seen this many data reports be incomplete. But net of everything, there seems to be a little bit of a squeeze going on. There's a lot of misinformation, though. Just because the price is going up, there's a ton of misinformation, and I'm going to clear some of that right now. So the CME group did change the performance bond requirements for metals for both gold and silver, which means if you're going to put up a contract on gold, then it requires 2,000 more initial 2,000 more dollars per initial contract for gold for both, and then 2,000 more, I think, for maintenance. If you're going to maintain that over a period of time. On silver, it's 3,000. And what happens is when you increase those performance bond requirements, essentially what you're saying is if you're going to reserve 5,000 ounces of silver, it's going to cost you 3,000 more dollars to do that. And it's a leveraged trade. So you're still not having to pay the whole boat, but it raises the amount you have to get in. And that tends to slow down a little bit investment in silver and gold when they do that. So there was a change in the money that you have to put up to get a contract, which what it does is it funnels out some of the smaller players who may not want to spend that. Because if you're doing it for legitimate hedging and you're having to put up 3,000 more per contract, it's costing you more to have that insurance. And so it may turn people away. But the big guys, they're going to do it because it's 3,000 more. They're, the big bullion banks. So sometimes when they raise those performance bond requirements, it lessens the amount of overall traders on the exchange, and it consolidates some of the trade to the bigger traders. Although 3,000 is not the end of the world. On silver, it went from the current initial of 24,000 to 27,000. So we're not talking a huge amount. Other things with the silver market that may be true or false. There's a report that China is now restricting silver exports, which is incorrect. It's in Reuters today that they're actually allowing, I think, two more companies to export silver than they did in 2025, in 2026. So they're expanding the amount of companies that are allowed to export it, but they're doing a licensure requirement, which means you can't just be anybody and export from China. You have to pay the license fee, and China is going to monitor that, although they haven't said that they're going to restrict the amount of tonnage. So that's been all over social media. That is incorrect. The supposed emergency meeting of the CFTC last week to go over a potential imminent default in the COMEX on Christmas Eve. Obviously, there's no evidence for that meeting on their website. I found no confirmation in the financial media that was credible. And obviously, the COMEX did not freeze up on Christmas Eve. We're already way past that. And so all of those rumors, the AI guy and all that stuff that's been floating around social media has either been proven to be objectively false or there's no evidence for it online. So I wanted to clear up a lot of that. So what does all that mean? it means that there is tightness in the market. There's no imminent default that we can tell. COMEX appears to have some silver there. They did increase the performance bond requirements ostensibly to slow the silver trade down a little bit, but this is one of many tools they could have used, which have been a lot more drastic, which is like, no, that's margin requirements. If they did position limits and things like that, it would be more drastic. So I don't see signs that the COMEX is imminently about to default. I do see signs that China is trading at a higher silver price than the West. That's gone. It used to be like $3 to $4 when I used to cover it, and I think lately it's gone to $5, $6, $7. And if you look at silver lease rates around the world to lease silver, because if you're leasing and you're taking that silver to use it for something, you're having to pay more to get that silver, and that's a sign that the amount of silver for lease that's free that people want to put out there, the risk rate has gone up. So it's like a bond costing more money or a mortgage costing more money to get a house. It's more expensive. So essentially there's tons, 90% of what you see on the silver market and social media is bunk, is patently incorrect. But there are signs from margin requirement increases on COMEX to the premium difference in China to the performance bond requirements to the amount of contracts that they have trading indicates that there is some tightness, but we're not in imminent default that I can tell.
Yeah.
So even though price is going up, I don't see an imminent default. I'm going to go to some comments made by some popular people that own large silver dealerships in social media. I'm not going to say who they are, but some people are supposing that there's a resource war going on. I think if you look at what's going on in Venezuela with the carrier group in the US and Trump basically saying he wants to put boots on the ground, I think we're in a resource war. I called it 5 or 6 years ago at the Money, Metals, and Mines, and I said this would happen in, you don't always know exactly how it's going to happen, but we're there. We're fighting for resources. The U.S. is trying to secure oil and other resources away from the BRICS nations in South America. It's kind of like a Monroe Doctrine type of thing in that the BRICS nations, but the BRICS, the BRICS, China and Russia, and the BRICS nations have agreements all over the world. So it's a breaking apart of the old world order in commodities and trade, and an establishment of a new world order in commodities and trade. And the U.S. is using the military. China and Russia are using trade agreements and trade. And you can see the different approaches to what's going on. And that's causing stress. It's causing stress in gold and silver. It will eventually cause stress in oil. Tavi Costa was on my program on Christmas Day, along with Craig Hemke and Stuart Engler. And we were talking about this, and Tavi thinks 2026 is going to be very bullish for oil because
office entry sensor open.
There basically are less wells going that are producing the same amount. So oil and copper should tick up in 2026, along with some of these other commodities. I do see tightness in the silver market, but it's not a retail-led. It's more industrial lack of output by the mines, which is causing the issue. I don't see this being the big breaking. I think if we had the big breaking, silver could go, I wrote in 2010 on Seeking Alpha, silver could equal the price of gold, 1 ounce to 1 ounce. And I think people thought I was nuts back then. But what I was looking at was if we actually go to a shortage and there's monetary demand during a recession, silver could potentially become more valuable than gold because it's going to have more demand characteristics. So I don't know if we're going to get there this year, but it wouldn't surprise me if we go to $100, $150 silver in 2026. And it wouldn't surprise me if you see a ton of money go into silver mine development. So if you're a silver mining investor and you have good quality projects in your portfolio, you're probably going to do pretty good in 2026.
They've really lagged. The miners have been, like for instance, the junior index. Like on Monday, it was down the exact same amount of silver, and today silver's up 6% and is up 1%. It's like it's really lagging.
Entry sensor open.
I think you're right. They're going to blow up for the juniors and for the miners when we realize, like, okay, it's really time to get back into investing in mining.
Yeah, I think it's a good time because you're starting to see profits come out of it, and the generalists haven't rotated in. They're still stuck in tech, and people aren't going to go into silver miners or gold miners until they feel like it's going to exceed what you're going to get back on like Nvidia or Apple or those big stalwart companies, which are easy to get into. The generalists aren't going to rotate until they feel like either the risk in those big tech companies is increasing more than the risk in the gold and silver market. So it doesn't happen at the same time that the bullion prices go up, but when it happens, because it doesn't take a ton of rotation. If you look at the trillions and trillions of dollars invested in the tech part of the market, if only even a small percentage of that rolls over into gold and silver stocks, they tend to explode. So it does not require, every financial firm reallocating money from bonds and stocks into gold and silver. It just takes a little bit. So, and what we've seen a doubling of the GDX over the last year to 18 months, and even more. And that's nothing compared to what will happen, especially if we have a real physical silver shortage. Because if we have a real physical silver shortage and we need hundreds of millions of new ounces every year, or maybe even 1 billion ounces to support all this industrial demand and potential monetary demand, then you could see existing silver companies, big ones, triple, quadruple, and you could see some of the small baby ones that have verifiable assets in the ground go up 10, 20, 30. And I think it's going to be bigger than
entry sensor
2016 and 2020, because when you add in the silver shortage, which wasn't there in 2016 and 2020 like it is now. In fact, the silver shortage really started around the pandemic period of time where we were using more than we were mining. So that blip, which was really good for the industry, only lasted a couple of years. This time, I think it's going to go up multiple fold of what it did in 2020, 2021. And I think it's going to stay longer because you need that capital to come in on the front end on the mines to develop the additional silver. So if we're going to more regional hot wars, like a lot of people have commented on the mainstream press, if we're going into resource wars, silver is a critical mineral everywhere. If the exchanges go bust and if people want to invest in it as money on top of all that, then you could see literally tens of billions of dollars go into this silver market in a short period of time. And the U.S. has already pledged $1.5 to buy silver and $2.5 to build infrastructure. Trump did that right after they named it a critical mineral. So billions upon billions are probably going to come into silver. And I think it's just going to keep running. But I don't see an imminent default on the COMEX just yet. Maybe that happens in 2026. But there's tons of misinformation out there. And it exists because silver is going up and people believe it. But people need to be careful, because if they're thinking silver is going to go up 10x, in the next few months, I think people need to be, if they're not familiar with how this market works, they need to be cautious.
Yeah, I think the rebound today was telling. Usually back in the day, like the PTSD from 10% yesterday, it just got people just selling, but there was immediate support, and I mean, it just blew back up today. Really impressive.
Yeah, it did. It went up quite a bit. I think it went up 7% in a day.
Yeah.
It did. Yeah, 6.6% right now. It's up almost $5. I mean, that's a lot for silver.
Yeah, and with everything that's going on geopolitically, everything that's going on in the silver markets, it's not necessary. It is translating to the physical bullion market on the street. Like reason why Rhyno is here is because Rhyno and I became business partners in a bullion business. Today is our grand opening, so Rhyno and our other business partner joined us, and it was very telling, because yesterday we sold some 100-ounce bars, and when we looked to replace those 100-ounce bars, some of the biggest wholesalers out there only have like one bar. And our other partner Kiri was looking at other products, and they're really low. Some of the bullion sites that he buys from are low on product too. The demand for silver is skyrocketing. And with our grand opening, I mean, when we opened our doors at 11 a.m. until maybe an hour and a half ago, it was just nonstop. People were buying silver like crazy. And I think that people who have never bought silver, I think today we had 3 or 4 customers come in that have never bought before.
We had a guy come in and bought, he won a bar of silver at a White Elephant Christmas thing. And now all of a sudden he's in here buying silver. He's like all excited about it. So there are a lot of young people are coming through.
Yeah. It's very popular, and we haven't even gotten the big boom yet, because I can still get silver bars, down here at the wholesalers. About a month ago, I could get regular bars under spot, at spot. You can still get them cheap now. It's not the major things like the Silver Eagles are going to have higher premiums, and I'm just looking for my price list of today, but the wholesalers are not. It's not astronomical what they're charging for silver, and that's actually a positive thing. People are all over my ass right now because I'm not saying that everything's about to go to the moon, or the market's not going to go tits up, but it's not right now. And that's actually a positive thing. I mean, silver's tripled and we haven't even gotten to the big boom. That's what I want to understand. That's the better news because we haven't even gotten to the big retail led boom. So if I'm looking at 1 ounce rounds, I can get flow round wholesale at 75 cents over spot. And they've got 5,000, they've got 10,000 of just standard rounds at 25 cents an ounce over spot. If I look at bars, I can get the 1 ounce bar, 2,500 of them for 25 cents per ounce over spot. Even
Rob, you think that's
like Golden State and Johnson Matthey are 80 cents. Silver bars, 10 ounce, I can get at 60 cents over spot. 100 ounce bar, $1 over spot. So these are not exorbitant prices on regular everyday run of the mill silver. So we have not had the retail boom in the US and the price is still tripled. That's the exciting part. And you haven't seen the confirmation of it going into the silver miners. They've doubled, but this is so what people have to understand. People are looking at it like 2020 and they think that and there was a rumored silver squeeze that didn't take place for reasons. And the reasons were it was done in the ETFs, not in the physical. And there was too much physical in the US that it wasn't going to squeeze it right then. But in the intervening 5 years, we've had a lot more stackers come into silver because of that, as well as we've been running the supply shortages from the mines. So now you're looking at it and the numbers are way more impressive in 2020 and people are saying this is the boom. And what I'm trying to explain to people, no, this is not the boom. We're nowhere near the boom. This is just basic supply shortages, popping silver like it popped oil years ago when it went to 140. This is not the big boom. When you start thinking silver bars going for $5 per ounce over spot, the generic bar, then we're in the boom. We're not there yet. So silver could easily go $300, $400, $500, $600 easily. I think even maybe higher, just depending on how long it lasts. So that's actually a positive thing.
I think because it's moved so much in the last month, like 50%, there's some people taking profits. And that's in part why I think you can still get, like, the big houses are getting silver coming in from long-standing silver owners. And that's kind of balancing things out. So they're adding inventory, like, I mean, under spot, people are bringing silver and selling it, but they've had it, and they had it since it was 10.
Yeah, we had a guy come in, and he's been sitting on 8 10-ounce bars for 15 years. It's like, I'm finally in the profit after 15 years. And there's people coming in bringing their constitutional silver and everything. It's people are taking advantage. We're buying and selling, and it's encouraging. To see the way that people are coming in, learning and buying, and also people who feel good that they bought either at the $40, $50 high years ago, now coming in and taking profits. It's vindication for the sound money movement, for what we've been saying for decades, right? We're starting to see it happen. And you're right. We're just at the start. Every bull market is around 10 years long. We're about 2 going on 3 years into this bull market cycle, and we haven't even seen the tops of gold and silver. I think we got a lot more to go.
Yeah, I follow a lot of people that have these large distributorships, and I know some, and I've been calling around. The Americans are still net sellers, and I think what's happening is with inflation and with some people, if you look at like 2011 through 2020, we had a couple of mini boom, or 2021, a couple of mini booms in which silver didn't go high enough to entice those investors who got in at 35 to 50, in 2010 to 2011 to sell. And now that we're sitting at 70 something, they're like, I'm selling, because that was a roller coaster ride of all roller coaster rides. And I'm taking my money and I don't care if it goes to 100. It's like Bitcoin holders. Maybe they held it for 5, 6, 7 years and they finally just want to get out. And if you think about inflation, when I had my store a few years ago, and I'm still seeing it now that I'm running the Kinesis store, people are wanting to sell to us to take that profit because of inflation, because they need to pay bills or they want to get out of debt. And so that's why I'm saying you're going to get sales, but you're going to get maybe more people selling to you right now because of those prices. But the big boom comes when you have that rotation of the younger investors you talked about, Rhyno, and you have the generalists who come into silver big time and say, I'm making a move into silver. And that's where you're going to get that blow off. You know, we talk about in our private chat all the time. This isn't the big blow off in the silver market. This was a nice move. That's a very early in the overall silver movement, in which the catalyst of, you know, use for war, use for these industrial processes, not being able to get the mines restarted over the next 5 to 7 years, the moves that you'll see in silver, I think, are going to be even bigger. And even like you said, even though we've got selling now, the buying hasn't really started. When that starts, it'll be like Mike Maloney says, it's unobtainium. You're just not going to be able to find it. And I think we may be a year or so away from that. And that's why I'm trying to tell people this isn't the big boom. This is fun. And it helps people have been in it for a long time. But this is not the big one. This is nowhere close.
Yeah.
I mean, what if silver 10Xs from here? What if all of a sudden some hot wars kick up in Venezuela? China finally says, okay,
Taiwan,
I want to add 10% to our export price. You know, all these things that could happen in the resource wars.
Yeah.
I mean, you may see silver just completely go nuts like nickel did a few years ago and like oil did a few years ago, because on the futures markets, and it could even bubble beyond what the real price should be, because we don't know the real price because we live in a fiat world. But it could be that silver even goes farther than it should. I mean, you could see silver go $500, $600, $700 an ounce, and then it actually comes down to some lower number at some point. And that's what people need to be aware of too. It could bubble. I don't think it's anywhere near a bubble right now, but at some point it'll bubble, and I don't know, it's going to be 1,000, and I don't know what it's going to be. It's going to be.
Yeah. Well, there's the gold silver ratio that some of our customers are doing. They're coming in and they're selling their silver to buy gold. And that's definitely a play. I think some people are predicting the ratio to drop down to about 25 ounces of silver to 1 ounce of gold. And that's definitely a way to play the markets, to grow your gold and grow your silver holdings, playing that ratio. So you were going to say something?
I was just going to say it's been interesting. So now we have this local coin shop, and we're in a smaller town in Florida. And it's just interesting to see how education and sort of like the watering hole concept of just being a local place. We got guys coming in, sitting around in the shop for 2 hours, just chilling, hanging out, talking. They bring their stuff in to show it off, not even to sell, like literally just coming in and saying, like, you know, so we're getting into helping people grade stuff. So we'll come in, we'll help them figure out what it's valued at. And all of it is education, because it's helping people to figure out what is real money, you know, what is true, what is not true. And so it's really an expression and an outflow of what C4SM is doing. There you go.
Philip is the guy who sat down, brought his collection, and showed us everything.
He's on the chat.
He's on chat right now.
Go, Philip.
Yeah.
So for us, just going back to C4SM a little bit, for us, this is actually a very valuable, practical outlet for education. And so we feel like it's a very natural fit to what we do at C4SM, but on a local level. And so we're going to probably do some more of these sort of shows where we, for instance, we got a fake Kruger. We didn't get it here, but we were showing off the difference in the sound between a fake Kruger and a real Kruger. And it is absolutely amazing. So we have it sitting out here. And so things like that, I think, will really kind of complement what we're doing with C4SM. And then Daniel, talk a little bit just about our founder, Jim, and kind of like how this ties in with his original vision.
Yeah, absolutely. And before I do that, everybody, if you're liking this content, give a thumbs up to the video. It helps spread the word in our videos and help the education on our channel. So go ahead and just give a quick thumbs up to this video. So one thing I wanted to share, why did we decide to get into the business and into the coin shop business? Well, the mission of Citizens of Sound Money is to promote the use of sound money and protect people's rights to do so. And when I first started working with C4SM and Jim was around, he started telling me about gold and silver. I started buying some, and then I started buying some for my mom, then friends. And our mission of spreading the sound money and promoting its use, selling gold and silver just felt part of that mission. And when Jim died, Jim was my wholesaler. I'd buy all my metals from Jim. And now he was gone, and people came to his memorial we had in Washington, D.C. And Brett Stelfox from Golden Eagles, like, hey, I'm Brett. I was Jim's bullion dealer. I'm like, oh, and we got connected. And I just felt this sense of like responsibility to continue doing what Jim was doing. And Jim was an owner of a company called Silverback Precious Metals. And, after just doing my thing like a side hustle as a hobby, I got a lot more serious earlier this year, or late last year, formed the business. And I decided, I want to continue his legacy. So Rhyno, myself, and Curie, we had a conversation with the partners, and we bought Silverback Precious Metals. So our company is called Sovereign Gold and Silver Exchange, and we bought Silverback Precious Metals really to continue the mission as an extension of Citrus Sound Money unofficially. And also to continue Jim's legacy. And, we are very competitive when it comes to pricing, buying and selling. I mean, we got local dealers that we're working with that say we're very strong in paying people, and we have very good prices. We try to stay, when you go and find bullion prices, this is our secret sauce. We try to stay within the top 3 lowest prices when it comes to selling any product. And that's because of what at our core, we're sound money advocates, and we want to get people out of the dollar and get them into sound money to protect their wealth. So let me actually hear that. You want to say anything else?
Yeah, I was just going to say that, in this sound money journey, everybody comes into it from a different angle, right? My journey is actually, Daniel comes from the crypto side. Yeah, he was a crypto guy first. Mine was, I came from the digital side. Like, I really like products like Kientz because it was liquid, it was fluid, it was flexible. And so I fell in love first with that, the idea of getting a yield on gold. And then, but ultimately we all end up at the realization that you got to have some physical, and that's sort of like your basis. And then from there, you kind of spread your wings into some of these other products. So the intriguing thing that we plan on getting into here is to introduce people to parts of the industry that they're not familiar with, and to show them how they complement one another. So for instance, we had a guy yesterday, he goes like, he has a bunch of constitutional. He's like, oh, man, I just don't want to end up in dollars. What am I going to do with it? Right. Mm-hmm. So like he loves silver. And so the idea of saying to somebody like that, well, why don't you EPD that into a system like Kientz, or why don't you put it in something like Alpine, which is a complementary system where you can hold value still in gold and silver, but it's a different product. So it's going to give you a yield, and it's flexible, and potentially there's a debit card that you can use. And so to me, it's more of a complete spectrum of choices than that people have. And, it's not so much just a physical or nothing kind of concept anymore. It's more of a complementary concept, buffet of choices, and all of them have different strengths and weaknesses. So we're excited about introducing people. We have three Orem companies in here. We've got Kientz, we've got Goldback, and we've got
Kientz, Orem's,
Metalmark. Yeah. So we have all 3 of those here, and just explaining to people how those are gold cash, and how really the idea with those are to produce, to replace physical cash. So we're really excited about being traditional and kind of being modern all at the same time, and introducing people to these alternative liquid medium of exchange opportunities.
Yeah, absolutely. And I bring a little extra when it comes to clients. Like before grand opening a few days ago, we had a couple come in, and I used to be a stockbroker. So I tell them, look, I'm going to tell you what when I was a stockbroker, what I had to do as It's for my clients to make sure I have my fiduciary responsibility. I give them the formula. And that formula, for those that are listening, is when you want to take 100. This is what they when you talk to a stockbroker, we all get the same training. You take 100, you subtract your age. If you're married, you take the average age between the two of you. That number that's remaining is the percentage of your net worth that you risk in stocks, crypto, and other investments. Your average age or your individual age is what you should have in safe assets. As a stockbroker, they said cash, money markets, bonds. I don't think any of that's safe. Bonds are no longer safe. I'm not a big fan of fiat. So my adjustment is you should be in cash, some, and metals, gold and silver. And then I break it down even further. It is good practice for everybody, for financial literacy purposes, to have between 6 months to 12 months in an emergency fund. What is an emergency fund? An emergency fund is your monthly expenses multiplied by 6 or 12. Then you take that 12 months, or use 12 months. If you have 12 months worth of an emergency fund, split that in half. You put half in cash in your safe or wherever, and the other half in metals. And then of that metal half, I'm always of I do this myself, 75 to 80% gold, 20% silver, because gold has always been more stable. It keeps up with inflation better, and silver has always been a little more speculative. And another reason you want to do that is, like, I did this with my mother back in the summer. We put her into kinesis. I did 75-25. Now it's almost 50-50 because silver has increased. That silver gold ratio is increasing. So once I feel with my mother's portfolio, like, all right, I think the silver gold ratio is there, I'm going to sell the silver and buy more gold, right? And bring it back down to that 25%. So I think that is a good metric. Because one, that's what they teach stockbrokers, 100 in your age. And then instead of putting in bonds and money markets, you put it in gold and silver, you split it up, because as the dollar is decreasing in value in that 50-50 split, your metals are increasing and keeping up with inflation. So your purchasing power is pretty much staying the same. In fact, it might be even higher because of this bull market that we're in.
Yeah. No, that's absolutely true.
So we provide more than just bullion. We're teaching our customers about sound money. I'd say about half the people come in here like, tell me about gold and silver. Well, I put on my C4SM hat. I'm like, well, this is money. This is the history of it. And really explain, like, why you want to get rid of the dollar and you really want to start protecting yourself in gold and silver. And that we also bring in our partners, like Kinesis, UPMA with Alpine Gold, monetary metals, different aspects. There's gold IRAs and so forth. So we're calling this, once we get situated with the physical side, we're going to be providing what I'm calling gold and silver account services and advising our customers on where they can put their money digitally or roll over their IRAs that they want to get into precious metals. So we want to provide a full sound money solution to those who want to really get in and start protecting their wealth.
Absolutely. Yeah, that's good. We're also getting into scrap jewelry. This has been quite interesting too. People are actually, because gold and silver are so high, especially gold jewelry, people are actually coming in and going like, what's this worth? So, it's an entire new paradigm. So I've not done a whole lot of work in that. And so this last week, I've been kind of studying it up, figuring out how to calculate things. And I think there are people who are sitting on a bunch of jewelry and probably have some liquidity issues because the economy is terrible. And we're going to see people come and trade that stuff in.
Yeah. Just want to say that SG4184, we won't have a booth there, but I'll definitely be there for Citizen Sound Money, and I'll be there with Rob. Rob's going to be at the fun show. Actually, there's Rob. He just said that. He said Daniel and I will be there at times. I don't have a table, neither will we, but we will definitely be at the fun show. And then McKay's Mama. I went in. McKay's Mama. I went into all metals August of last year when the Fed cut rates. I knew there was going to be a problem, and I sold all my Bitcoin. I sold all my stocks. I put everything. I'm 98% precious metals. That 2% is the cash I need to really
Front door.
function in
Entry
this type
sensor
of
open.
economy. It's a fiat economy. Anything else?
No, I think that's pretty much it. I think the next couple of weeks going to be interesting. I mean, like 10% up, 10% down, 6% up. What's tomorrow going to be? I just, it's not boring. Whatever it is, it's pretty exciting. We had a guy last night who really wanted to lock in his price because it was down 10%.
Entry sensor open.
And we figured out why. He was like, it's going to go back up. So it's definitely interesting times of how volatile things are. It's unusual. It really is.
It's, and I have my own theories. Like these types of percentage swings. I was on a show. I don't know who was on. I don't know if it was Crypto on the Rocks or something. I did I pulled up a chart of the price of the Deutschmark versus gold, and overlaid with the price of Deutschmark, there was the yield swings. And when fiat currency is about to die, or there's major fundamental problems with fiat currencies, that is when you start seeing major moves up and down, not in the price. The price moves a little on the chart because of we're parabolic right now, but it's the percentage swings that are really out of line. And having 10% up, 10% down, 7%, 6% up, that is not good or healthy for any fiat currency. And I'm not saying we're going to see the death of the dollar. What I'm saying is we're about to see a different monetary system. We're due for a new system where we are near that end. Look, the average currency that is the global reserve currency is the currency for around 40 to max 90 years. The U.S. is at that point, right? We're past the 90-year mark. And with the way everything is going, the way BRICS is moving away from the dollar, the world moving away from the dollar, we're starting to see something. And I think these moves in the percentage yield changes is a sign of the symptoms that we're seeing.
Yeah.
It's essentially what you've got if you got the world dealing with inflation. So the world's dealing with inflation, that genie's out of the bottle, and we're going to continue to see rotation into commodities, specifically precious metals. And so typically how it goes is you have the economic issues, then you have resource wars, then you have hot wars to secure resources, and then you have generally a deflationary recession along the way. And then more countries jump in, because if you look back at past wars, a lot of it, and I was talking to a friend that lives in the Russia area this morning, Eastern Europe, and he moved out there a couple of years ago. And he's kind of got ear to the ground, and we were talking about the history of conflict, and what it looks like right now for Europe is that they're screwed financially. And when I wrote my book Drop Shadow in 2009, I said it would either be Europe or Japan.
First. Entry sensor open.
Europe right now is having bond market issues, although mostly it's on the short end. So the bank should be able to manage that for now. If it goes to the long bond, the 10, which it's starting to, the 10 and the 30, then Japan's in serious trouble. So we're looking at Japan. Yeah. The entire economy in Europe is screwed between energy, bond rates, production, GDP. That whole area is a mess. And so as those go into deflation, which they will, the emerging markets are really going to carry, they're going to carry the world economy, because they're going to be building. But you're going to have these traditionally powerful nation states that face losing not only reputation, but power in the world and influence in the world because of their aging financial infrastructures and the amount of debt that they're carrying, their interest rates and inflation. The U.S. will be thrown in there, and it's going to cause the developed world to try to grapple on to what they're losing, while the emerging world really comes out of it, and China and the BRICS economies emerge as the predominant financial powerhouse. And in the middle of all of that, you're going to see currency crashes, hot wars, that type of stuff. And so really we're sort of in the first couple of innings of that, maybe 10 to 15 to 20 year process. And this comes about every 250 years. The British was a great empire. Spanish were a great empire all the way back to the Assyrians in Rome. But about every 250 years, you see this rotation. So it's rotating. The economic power is rotating out of the West and to the East. And, you know, what you see in silver is just a small little baby bit of everything that's going to happen over the next few years. And how you deal with inflation, and how you structure a portfolio, and how you deal with that kind of stuff. You know, if you're in the West, if you're in the US or the UK or Australia or one of these Western countries, how you structure yourself financially, maybe how you kind of survive, because there's going to be a lot of economic pain as this sort of rotation occurs. And that's what we're seeing. But we're, like I said, we're in early stages. Like, we're at the very, very, very beginning. So, I mean, if you're talking metals prices and you're talking bond rates and inflation, all of those things are going to explode upward. And the metal prices are just going to be driven as inflation goes up and as the debt issues occur and the fiat currencies start to break down. I would say that gold is already, oil is already priced in gold now. The other commodities are priced in gold, and gold's taking over as the default money of the world. And silver is going to be not as much money as it's just going to be the asset which everybody uses to build their economy, and they're going to use it against you. It's going to be a weapon. Silver is going to be an economic weapon. Who has it? China has a lot. Mexico has a lot. Peru has a lot. US has some. Whoever makes the right alliances and has access to silver, it's going to be critical to the future of, especially with AI and all these technologies, of these technologically based economies. And that's why I think silver could eventually surpass gold, potentially, as a super asset that, you know, has such tremendous value. And like I said, we're in early stages of that. I don't think we're anywhere near the end. So if you're a metals investor, you've got a long time to go before you're worried really should be about selling your metals. I think there's years and years and years potentially of this. And it's because you're clearing out the old system. The old debt-based fiat system is dying, and the commodity wars have started, and the geopolitical realignment has started. It's all a big game of chairs, and whoever holds silver is going to do well.
And it's just going to get consumed more and more. I think Samsung's coming out with a battery in 27 that's like the next generation of batteries, and it has got a boatload of silver in it. So it's just amazing to me that nobody's thinking about mining production, and it's just not like an alarm going on. Right? Like
5 years.
It's like crazy.
5 years demand has been higher than production, and we would have a deficit. And
the U.S. government fell down because if they had listened to their geologists, it takes 5 to 7 years even to get a small mine running. I'm not talking about permitting. I'm talking about the hundreds of millions of dollars it takes a small mine to invest. And most of them collapse because they can never get lift off velocity by the time they've overissued too many years because people weren't investing. So the time for the U.S. government to be investing billions of dollars of silver was 5 to 10 years ago. And that's where it gets really compelling for the silver market, because it's all Johnny come lately. China, Peru, and Mexico, and a few other places really have the developed silver mines. The United States does not. And the United States is not on the best of terms with Mexico, China, Russia, and Peru.
But I noticed that
it's not like the U.S. just they can just call up their buddies and say, ship me a couple of million ounces of silver. They're going to have to either develop it or they're going to pay a premium and buy it, and it's going to make
I
everybody
saw
else.
where the average mine cost is $26 an ounce, right? Across, like, I think it was 10 of them, and so it's going to be interesting to see what the returns are from these mines with the product. You know, the fourth quarter when results coming out in January, and maybe that's when people start jumping on when they got PEs of 5 and you know, just crazy low PEs. Because of just the bunches of money they're going to make. I mean, 26 to 70 is incredible.
And there's a company, SQ4184, I think it's called Load. Corey was talking about it. Load. They are primarily recycling now. So it's LODE. Look them up. They're recycling. That is one of their primary businesses. They just opened up a few facilities. I think in Texas and maybe in Florida to recycle and recover silver.
It's a lot of solar panel recovery. They've got a special patented technology that makes it cost efficient, but at these prices, I mean, they're going to do really well.
Yeah. Well, before we wrap it up, I want to ask the audience. We have over 100 people watching. Just a few questions before we end the broadcast. Go ahead and ask your questions. We have one question from higher up from Enough is Enough. He's a regular on our channel. Will miners be able to secure leases and permits to expand operations, Rob?
It depends on where you are. If you look at Mexico and the Western United States, they're more leftist, whether it be the local permitting agencies in the Western U.S. or even the federal and Mexico's current administration. And they're limiting permitting of new mines. Now, that ain't going to last very long, because if silver is going to continue to run and it becomes critical mineral everywhere, they'll turn it around. But all it's done has slowed way down 2 to 3 years, and in the US, 5 to 7 years of development of future supply. So what I think is likely to happen is you're going to have like an arms race. There's going to be so much pent up demand for new silver coming out of the ground that you will see billions upon billions upon billions upon billions of dollars flow in from other asset classes in the world. And I think that China, the US, Mexico, Peru, Australia, those traditional big silver producers, a little bit Russia, a little bit South Africa, but mostly the other ones, are going to restrict exports out of country, and they're going to secure and only trade with their partners. And there will be a tremendous amount of development, but it may take 10 years before we get to the point where we have enough silver coming out of the ground to mitigate, and that's even if they fast track the licenses, just because infrastructure takes that long. And I think that that there will be permits, but I think they're going to be regionally, and the output is either going to only stay within that country or it's going to go to designated trading partners. They're on new mine development. Right now, you see companies like Samsung, and they've been doing this for years. They did it with Impact Silver. Now they're doing it with someone else. They're going and buying silver straight from the mines. But there are going to be countries that prevent that. They're going to prevent these big corporates from sucking it all up. Because think about it. If silver is a strategic asset, does it need to go into a TV or a missile? Does it need to go into internet infrastructure in the US, or does it need to go into a new iPhone going to China? So what you're going to see are these flow controls of who can take silver out of a country, and the governments are going to protect their internal silver investments. And the US government's already doing contracts with gold and silver producers to buy output. And I've never seen that in the 16 years I've been covering it. Well, that's the tip of the iceberg. The governments are going to be the biggest buyers of the silver, and it may not even hit the COMEX or the London OTC. It may go straight to the refiner. And by the way, a lot of refining in silver is either China or the Swiss. I don't anticipate the US wants to export to Switzerland. So that 2.5 billion they put on infrastructure development, they're building refineries here in the US. So you're not going to see the global trade of physical movement of silver as much anymore. It's going to become, if you have any, you're keeping it and you're going to the market trying to get as much as you can. And so, yes, the mines, they'll have to permit mines all over the world, but they're going to restrict what companies can do business, and they're going to restrict where that flows. And they're going to restrict whether you get silver on your iPhone. There may become a point where people are stuck on their iPhone 16 because there isn't a 17, because there's not enough silver to make a 17 or an 18. And you may see silver rationing, much like there's sugar rationing during the Great Depression. You may see silver rationing because it is that critical. And so I think it's just going to be, yes, they'll permit mines. They're not going to let it flow around the world. The exchanges are going to dry up, and they're not going to let foreign people come in and take it. And there is going to be a premium on everything that has silver. And you may see it may not see as quick a product development in tech because of the silver squeeze. If we have a true silver squeeze, you could see companies like Apple and Microsoft and all these big companies that do all these data centers and all this tech and the internet really suffer, because it's not just that they can't get the silver at a cheap price, because silver is very price elastic. If it goes to $100 an ounce, Apple's still going to buy it and put it in their phone. The phone's just $5 more, but they may not be able to get the silver. Right. So you may see tech product development actually slow down for a time.
Right.
Because silver is just not readily available, and they're going to have to develop substitutes. And that's why I think silver could eventually approach the price of gold. And I wrote that in 2010 for Seeking Alpha, because gold has a lot of the similar electrical attributes of silver, almost about 90% of the same ones. And it's the closest to silver in terms of even more than aluminum or copper in terms of all of its characteristics in the way that silver's used. So, but for gold to be substituted, the silver price has got to go way up. Yeah. So, and there's a ton more above ground gold. So that's another thing that's going to pull silver's price up into equity with gold, is if you're running a true shortage of silver and you need something that acts like silver in all of its applications, gold is by far the best substitute before you get to copper, aluminum, or any of that other stuff. Yeah. And that's going to pull the price of silver up even more, I think, over the long term.
So the next question, Rob, how much silver does JP Morgan have or control? Some are saying 700 million ounces.
Nobody knows, because they don't keep it all in the COMEX. They did flip a lot of their silver from registered to eligible, meaning it's no longer free for trade. It's less liquid. And eligible is just a category that means you're storing it on the COMEX warehouse. It doesn't mean it's part of the market. It could be privately owned. It could be contract for something else, because all the COMEX, most of the COMEX depositories were stored for private clients and the COMEX. They're just COMEX approved. And what the COMEX does is they look at the two categories. The registered is, I'm saying I own, this Brinks vault, and I'm saying 100 million ounces I'm going to make available. I've got 200 million ounces that are privately owned, and it's not available, but it's eligible, meaning somebody could sell it. But it's kind of like, you, that's like saying I could have another 100 loaves of bread at the grocery store, but they're not there. They're at the factory. Well, you can't sell them if they're not at the grocery store. So I think that JP Morgan could have any number of ounces that they want. They could have 3 billion ounces of silver that you're never going to see on any inventory listing anywhere, because it's not part of the system. And they could also rotate all of those ounces they have on the COMEX that are ineligible. They could just rotate them off, because they're not listed for exchange. And so JP Morgan has on their silver position protected the ounces that are there. Are they owned by their house account? Are they owned by the clients? We don't know. But most of JP Morgan's ounces don't exist anywhere that you're going to find on the record books. It's private storage. And if you go back to old guys like Ted Butler, guys like Ed Steer, they think potentially these big amounts, just because you've seen JP Morgan in that market for so long, but nobody knows. Literally no one knows. However, JP Morgan, HSBC, Citibanks of the world, Bank of America's, if they were smart while they were playing that short game for so long and keeping prices suppressed since as long as I've been covering the market, they should have been buying physical ounces, knowing that the silver shortage was going to occur. And so it wouldn't surprise me if JP Morgan has billions. I don't know, but no one has a clue. There's no way to track it.
Yeah. All right. We got a few more questions. I can answer this next one. So if I'm wanting to buy silver, where should I go? Kinesis?
Hey, Tanya.
You know Tanya?
Yeah, I do know Tanya.
Oh, so we have a video. If you go to City of Sound Money, we did a video with Silver Seeker where we teach you how to spot fake gold and silver, how to test it, where you should go to find prices, and suggestions on where you should go to buy physical gold and silver. So yes, if you want to buy digital gold and silver, absolutely Kinesis, absolutely Alpine Gold with the UPMA. You can also go through Glint, and there's other companies out there, APMEX with One Gold, right? One Gold. So there's definitely companies out there, but definitely Kinesis if you want like asset-backed digital currencies. And if you want physical and you're in Florida, Sovereign Gold and Silver Exchange.
In Florida, our website just went live today. It's like 95% done. There's a couple things left. We'll maybe post our website in there.
Yeah, I can do that.
SGSE.gold.
Yeah.
SGSE.gold. And just as far as Kinesis goes, I'll tell people, yes, we have silver. We have moved so much silver over the last month and a half. I was at one point, I thought we were in danger of running out. And so we're producing more here in the US. And so we'll have some more silver coming. But I will say that and these are big whale part. This is not 100 people coming in, but these are 4 or 5 big guys liquidating us out. And I can tell you what's happening. The big guys are buying huge truckloads of it, so that when all the new guys get into it, you're only going to be able to buy the scrap that was bought in the last 4 to 5 months. So Daniel, you're taking in lots of scrap in your store and you're buying. Yep. That makes only silver available because the big guys are sitting here draining APMEX and they're draining SD Bullion and they're draining Kientz behind the scenes. And I've had 3 or 4 guys come in here and just hit us with $1 million orders. And it's like, wow.
Yeah.
So the big money, the smart money in the metals is moving right now. And the silver, because they know the shortage is coming and people are buying, $1 million at a time, $1.5 million. I've seen it. And if you're a small fry and you're buying every month and you're getting your 10 ounces or whatever, just keep doing it and don't stop, because there's going to be a point in which there's not a lot available because the big guys are cleaning us out. That's what's happening.
Yeah. All right, 2 more questions. Did a paper contract exchange fail to make deliveries last Friday, causing the price to run up? Remember there was that rumor that they were trying to settle 12,000 tons. Was there any validity to that?
No one knows because they're never going to announce. They don't announce the details of any contract. So anytime you see somebody say there was a fail this or that on the COMEX, it's not publicly available. They do that on purpose because it protects the market participants. If you're going in and then you're hedging silver, you don't necessarily want your competitors to know you're hedging it. You don't want people to know your position. So they don't print the actual people that are standing for delivery or taking contract positions. They report it through groups or entities like this is a merchant, this is a bullion bank, this is a financial house, and you don't even know who they are. It's all aggregated information. So there's no way for anyone to know that. Personally, I don't find the rumor to be credible. It could be like say, for example, it's China. One theory, China came in and stood for billions of dollars. Okay, fine. China knows there's no chance in hell that the U.S. is going to give it to them. And they know that the COMEX exchange allows for cash settlement. So they can go in there and try to get the cash. And maybe that would have caused a bank to panic if they had a large position, because that's a lot of cash. And if you don't, if you don't have the silver and you don't have the cash, that could be bad. And one of the rumors was that they're running around trying to get it through other exchanges because the silver didn't exist on COMEX at that amount, which it wouldn't have. Yeah. But I find no way to validate that. And I would also say that that's probably happened more than once in the last 10, 15 years. If you go back to 2008 with the run on silver, it wouldn't, in the Hunt brothers, even before that, it wouldn't surprise me if this has happened 20 times. And that's why I don't think the COMEX is going to default right away, because when I talk to people at the CFTC, the regulator, like the guy who was regulating all of the spoofing and stuff, I talked to him at a conference a few years ago. He was the lead investigator, and he was the lead investigator over that JP Morgan case that they got fined $920 million. What was I going to go with this? The CFTC and the CME group are always going to have ways to prevent that market from defaulting. And they're actively going to manage to prevent it from defaulting. And the COMEX is not a place you can force delivery. Now you can cause problems in pricing, sure, but you can't break it that way. What's going to break the COMEX is when the premiums in Chinese silver are so much higher than the COMEX that it loses legitimacy. Right. I think that's what's going to break it. It's going to be more reputational. It's not going to be somebody coming in and staying for delivery, because they're going to tell them to go pound sand. And look, if let's say a Bank of America is short so many ounces and they're on the verge of breaking apart, the consequences of that would be to destroy the dollar, to destroy U.S. treasuries, to destroy the viability of all the commodity market prices in the West that are set for the rest of the world, that the U.S. government would bazooka print trillions of dollars to prevent that from happening. And if you look at the last bailout, the last set of bailouts, the U.S. government got in there and they bailed out the banks. So if it's just silver collapsing and it wouldn't affect the dollar or the treasury, then maybe they'll let it happen. The U.S. government's not going to let silver or gold default on the COMEX, a hard default publicly, because it would destroy the dollar. And the U.S. government, there's no way they're going to destroy the dollar. They'll just print billions and pay them off. And Bank of America will get bailed out, just like the banks always get bailed out. During the Obama administration, they were bailing out the auto companies. Yeah. They don't want a catastrophic failure that takes down an industry or a bank or an exchange like this, because it destroys the U.S. economy. So I think it'll be a soft default. There's probably already been soft defaults, but they're just going to pay people off. And I don't know what that does to Bank of America. I don't know how they're going to pay the U.S. government, but I guarantee the U.S. government will bail Bank of America out before 100%. They let them outright default. And if you look at what happened in previous instances, they always get bailed out. The banks always get bailed out. The too big to fail banks who are participating in these derivative markets always get bailed out. And they're going to get bailed out again. And so what's China going to do? Say, well, we were standing for delivery and do it publicly. What does that do? That's not going to break the market. So China's going to come in, demand delivery. CME Group's and the CFTC is going to say, man, we'll pay off in cash. And if you want a certain amount of ounces, we'll work with you to get it around the world. And then the U.S. government's going to bail out that bank. And more than likely, that never even hits the mainstream media unless the U.S. government decides to make an example of a bank like Lehman. Lehman was made an example of on purpose. That could happen. But the U.S. government will bazooka print trillions of dollars before they allow the gold or silver market to fail in the West, I think. Because the consequences of not doing that are the failure of the fiat system. And that would reverberate around the entire world, not just the U.S.
Absolutely. And this will be the last question from Robin Hood, which came to our shop today. It was great meeting you, brother. His question is, do you know of any miners that fear nationalization of the mines, and do you see that as a possibility?
Yes, I think nationalization should occur, as we were talking about earlier, with regards to securing resources. I talked to a couple of companies last March at PDAC. I'll be going to PDAC again in March in Toronto. I'll be speaking there and then going around talking to people. Interestingly, last March, the companies that were doing the best and felt like they had the most freedom were those in China. And so China has, as long as you follow Chinese rules about the how you do it socially and share revenue and all that, you can mine gold and silver in China and do very well. Because China's going to buy it from you. They're the biggest buyer, in addition to, as long as you follow the rules, you're going to make money. So, the fear is that some of these places that have been what people thought was going to be the biggest confiscation or nationalization risk are actually the ones that are going to allow more free trade. And it's going to be the countries like the U.S. and Mexico that nationalize, because they have got to keep it. They've got to keep it. They cannot let it get to the world markets. And so it's going to be opposite, I think, of what people think. And yes, there will be nationalization, and it will be kept in regional markets. And there will be different prices on regional markets like you see now, but you're going to see it. You're going to see Russian, Shanghai, Dubai, U.S., London market all have different prices. And because there's going to be restriction. And I'll tell you right now, there are countries in the Middle East that are restricting exports of gold and silver right now. And it's already started in the Middle East. And you see import restrictions on the imports in places like India. Turkey's got export restrictions. Some of the biggest gold and silver markets in the world are either restricting imports or exports, and they're tracking them. So this is already starting to happen. And yes, the mines are going to become, not only are you going to have export restrictions, the mines are, it's not they're going to be nationalized, like taken over, like owned by the governments. The governments are just going to buy all their output, and they're going to feed it right into their industry. Like they're going to go to whatever mine in Nevada or Utah, and they're going to grab that output and they're going to say, stick it straight on the COMEX. And that's the only place it can go. And this cannot leave the United States. So it's not nationalization as much as it's facilitation of more regional trade and regional prices.
Yep, absolutely. Well, Rob, thank you always for coming on. We've had actually the most viewers ever on a live stream, 182 viewers. So this is great. We just want to educate as many people as possible. So if you like this channel, we now have memberships on YouTube. And if you join, and once we get to 25 members on YouTube, we will start having private live streams for our members. So go ahead and join. There's different levels. We have, I think, from copper all the way up to gold and everything between. So go ahead and support us and go to Citizens for Sound Money and join our Pioneer membership. It's $25 or $100, and you get access to metal markup and other benefits per year. So guys, thank you so much for watching us live. We will catch you next week on Sound Money Matters Live, and we will also have a live stream at 7 p.m. on Friday. Thank you all. Merry Christmas and Happy New Year. God bless you all.
Thanks, everyone.